That house I bought for 520,000 in downtown Toronto at Ossington and Dundas, and that seemed like the most expensive house in the world to me at the time.
Hey investors, Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Today, we share the story of Randall Reashore from Ontario Assets. He's been invested in Toronto doing duplex conversions, as well as out in Peterborough doing student housing with a huge depth of knowledge. Not only that, he's been actually investing in Toronto recently, making some pretty big equity plays out in Parkdale. So he shares a story with us. So whether you're just getting started, you've been doing this for some time, if you want to hear how people are still successful, even in a housing market that sometimes seems a little ridiculous and impossible, well, you're going to get that value today from our guests. If you love our show, if you're getting value, please like and subscribe. And you can share this at Watson Estates. Tag us on Instagram and appreciate all you do. Any comments you have below, myself or Randall will be sure to respond. And I know you guys are going to love this episode. Enjoy the show. Randall, how are you doing? It's good to have you on the show.
Yeah, thanks for having me. I'm doing great. Beautiful day out here in Toronto.
Sure is. I'm thrilled to have you come on. We love to do updates and keep in the loop with what's going on in the market. I know you're savvy on what's going on, and you've got multiple different types of investment. We were chatting a little bit before the show. So I'm excited to have you share some of those strategies you're using and I guess to start off, we want to get to know you a little bit. Tell us what you've been working on and how you kind of got into the real estate game.
Yeah, sure. Again, thanks for having me. It's always nice to chat with people that are in the business and of like mind. So yeah, I've been involved in real estate, I guess, since 2011, late 2011. But I didn't start doing this full time until say November 2016. And then I didn't get licensed until 2018. So I decided actually to take a route from investor over to realtor rather than already being a realtor and then starting to build a portfolio. So I had seen kind of through some of my personal transactions or transactions with some of my early joint venture partners that there was some money leaving the table to the realtors. And it seemed like easy money to keep in-house. So I decided to get my license and start to not only build the investment side and build the portfolio, but offer those realtor services to my clients and to myself.
Yeah. So have you found, how has that kind of changed the way you invest, or not all that much? Are you just kind of involved in the transaction, or has that allowed you to do other things now that you've grabbed the license? I'm curious for people who are doing similar things where they've got an investment portfolio, but maybe they're considering, oh, the fees are high, maybe I, get licensed. Is that still a worthwhile strategy, or how has that really benefited you?
Yeah, so I definitely there's an obvious benefit to the idea that you're going to keep the commissions on either end of a transaction. So that's one benefit. But I found the other benefit to be just really making me fully immersed in real estate. So even when I don't have a project on the go, or I'm not actively shopping for a new property to acquire for myself or a joint venture, I'm in the market working with clients. And it also allows me to share my knowledge, share my experience, and give that high level of service to my realtor clients. Before I got into real estate full time, I ran a hotel in Prince Edward County, and before that, I worked in hospitality and restaurants and bars for 20 years maybe, and I really like that service, that high level of service, like a boutique hospitality kind of connection with people. And being a realtor allows me to do that. Where investing, of course, I have a network, like a mastermind of friends and peers and mentors, but it's not as it's a little more of a lonely business than hospitality is. So this allows me to still work those social muscles and connect with people. And like I said, share experience.
I really love that. I mean, I came in from the other direction. We went realtor to investor, but I think having that, one of the big things when I'm working with or chatting with other investors who are, or realtors who have the investment background, is there's very few of them. I find it's a bit of an unknown world, ironically, in the real estate community. So having you come from an investor to a realtor is actually more, and from my perspective, seems more believable that you're familiar with the investment community versus someone who was a realtor and then get into investment, because there's this natural pull to grab commissions and less of a pull to building your asset base. So I think that there's a lot of, I think one of the trade-offs for this as well, I guess as a counter, because I know there's a lot of benefits, but a big counter, I know as someone who is practicing in real estate, I realize that there's a lot of people, once they have the investment, but then they also have the license, if they're not practicing the license, like they're not practicing the real estate, they're just doing it simply for commissions, not the relationship. They end up grinding their gears, and very unfamiliar with the industry. Funny enough, like they don't know what's moving, what's the trends, what's changing. So having that pulse for what's going on, I think is really good. So let's focus on the investment side. So on your investment side, what has your career in real estate look like, and what are you up to today?
Right. So yeah, I started my investment career with my first property in December 2011, and that was a single family home in Toronto. But even back then, I bought it with the knowledge of that I was going to put a basement apartment in that house, and it wasn't to create wealth or time and money freedom. It was simply to help me pay the mortgage. That house I bought for $520,000 in downtown Toronto at Ossington and Dundas, and that seemed like the most expensive house in the world to me at the time. I remember having a conversation with my mother-in-law about I think my mortgage on that would have been, I don't know, just spitballing numbers, but like 405 or something. And she was like, how are you ever going to pay a mortgage of $400,000? So just it's interesting how times have changed. But so I started at that property and on that project, house hacking in essence. I rented my guest room to my friend, and then we renovated the basement into an apartment, and that allowed me to live for free with my new wife. My newly married girlfriend, who is still my wife. So that was the first project, and then it kind of moved on from there. I did that same thing another time, kind of like a live-in flip or a BRRRR to myself, while I maintained the Toronto property that I bought previously. And then, like a lot of people, I started to just do the BRRRR method, or the value add and refinance and buy another one. And one of the best ways to do that, I know we all know how a BRRRR works, or most people listening to a real estate podcast like this know how it works. But the real critical piece that is sometimes overlooked is the cash flow piece. You can't keep refinancing properties, and you shouldn't probably be growing a portfolio if those properties aren't sustaining themselves and paying you at least decent positive cash flow. I would say personally, it's $400 to $500 a month. I don't let my properties cash flow less than that. Otherwise, my contingency or buffer fund or whatever starts to get depleted with one or two minor or major repairs or appliances that break down. So I really stressed that at the beginning for myself, was ensuring I had significant cash flow on every property, and then pulling the trigger on a refi, and then picking up another cash flowing property.
Yeah, that's a good point. So just to kind of dive into that. So not just seeing the cash flow right out of the gate, because sometimes you pick up a property, there'll be cash flow and you think, oh, well, now I can add value and refinance. But at that refinance piece, once you get that mortgage amount higher, you could fall short. So you're saying calculate the cost post renovation, post refinance, and ahead of time. I think that's really good advice. And I do think that trips people up, because they think, hey, look at the cash flow I'm getting out of this place already, and I haven't even done any work. Well, what is that going to look like later?
Yeah. Or sucking that equity from the refi right down to zero cash flow again, where you don't have that buffer every month that's building and growing. You know what I mean? Like if you refi and just left a little bit more in the refi, and it left that cash flow buffer, just creates a peace of mind that is, you can't put a number on it.
Love it. Love it. So from there, where did you go? Because I know you've got a lot more for us there. So what did you do after the house hacking?
So I was doing these kind of like live-in flips or live-in BRRRRs, I guess, until I had a couple of properties. And then in 2016, I, at that point, was the general manager of a hotel, and had a big staff, and I had a 2-year-old son. And I was working 70 hours a week, and I wasn't seeing my wife or my young son. And I decided, hey, these couple of properties are almost making me as much per year as my salary, and I'm trading a lot more time and freedom for that money. So I decided I was going to just quit. I had no plan. I didn't know more about real estate than what I've already described. But I said, I think I had listened to a couple Bigger Pockets podcasts, and I had read the Purple Book, Robert Kiyosaki's Rich Dad Poor Dad. And I was like, I'm a hustler, I'm a hard worker, and I'm smart enough. I'm going to just pull the trigger, and I'm going to start a business doing this. So that's what I did in 2016. But to do that, I did the other thing that's done very well for me, which was I found a mentor. So I started to kind of look around. And so, like I said, I was listening to Bigger Pockets as an example, right? Which are great free mentorships, just learning from experts on these kind of platforms. But I started to look around in the regions that I was interested in. I was raised in Ajax, Ontario. So I started to look in Durham initially. And anyone that knows Durham real estate, there's probably one name that comes to mind, and that's Quentin D'Souza. So I reached out to Quentin at Durham REI and started to build that relationship, and eventually joined his coaching and mentoring program now that I was recently unemployed and could dedicate full time into learning this stuff. And that's what I did. I took his 2-year coaching program.
I love that. And Quentin is the only guest I've had on the show twice.
Yeah,
And
he's an awesome man.
He's very smart. And actually, he recently, for anyone who doesn't know, he had a book come out which covers a lot of the content from the training program. But he actually started his own podcast. I can't remember what it's called. Probably Durham REI, similar.
Get Real Wealthy.
There you go. You guys can check that out. But Quentin's a hustler out in the Durham region. I know I think I saw on social he just closed on like over 200 units, or
202
he's a
units.
Bit of a beast out there.
Yeah, 202 units in Kingston.
Yeah, there you go. There you go. So as you were looking out in Durham, what did you do? Because I know your strategy changed from the house hack. Tell us a little bit about that.
Yeah. So I then got coaching, and the very first thing Quentin said to me was like, okay, well, tell me your financial situation. And I was like, oh, this is going to be easy. I just quit my job. And he said, what, why would you do that? I was one of those guys that made the mistake. Some people feel like they wait too long to leave their job and then get into real estate investing full time. Well, I did the opposite. I just kind of threw caution to the wind and jumped in. And luckily I had a couple of properties that I just kind of, like I described, kind of fell into just one by one, that were helping support my family. And my wife worked part-time, which helped as well. But I was able to literally just focus on this all day long, every day. And part of what I learned with Quentin was joint ventures. So being able to be the expert active partner with all this time and new knowledge that I was gaining and some of my little resume of portfolio, I was able to connect with friends and family to take the chance and invest in my early properties. And I built the initial portfolio through joint ventures. And then as my business grew over 2 years, I was able to, again, start qualifying for mortgages and building more properties on my own as well, which actually took me from Durham into Peterborough, because during those 2 years of joint ventures, the Durham market exploded the same way the rest of the GTA did. The prices we're talking right now, 2017, 2018. We all know that those were like really big gains those years.
Yeah.
So I started to look, where's the next market? Where hasn't it blown up yet that it's going to? And I actually followed the highway. I knew the 407 was about to connect. They said it was going to be in 2021, 407 over to the 115, which is the highway that gets you right into Peterborough. And I said, well, there's post-secondary universities there, and there's a highway coming, and there's hospitals, and there's industry. This is where I'm going to go next. So I got in pretty early to the Peterborough market, mostly in student rentals.
I love the thought process there on following the transit. I think that's a good way, where it's about movement, right? Where are people moving to? And then also seeing jobs, and I think it's worth, I like to have I haven't had many guests on talking about student rentals. I think actually Andrew Hines might've been the only one we've really had the conversation with. So I'm curious your thoughts on that. I mean, obviously we've just come through COVID. There's been some shifts and shaking, but I know you're a big believer in student rentals as a platform to get into the market. So I'm curious, what are some of the benefits, or what do you love most about that space?
I think, let's say there's a couple of main ones. Firstly, universities are usually built in cities that have other things going on. So you're not only specifically relying on students. Like if you think of some of the big cities that are university towns in Toronto or in Ontario, we're talking Toronto, we're talking Kingston, we're talking London, Peterborough, London, Kitchener, Waterloo, Cambridge. Like these are all towns that we all know of for other reasons as well. It's not just a one pony town kind of thing. So it's not only that, they're great for student rentals, but they often will have other rental opportunity, which I like, having other exit strategies from investment. So that's one thing. The other thing is cash flow. Anytime in real estate investing, you're trying to create density within the walls, whether that's adding a basement apartment, duplexing a house that's 2 floors, or creating rental bedrooms, which is what I focused on in Peterborough early on, was kind of turning the dining room, which, I don't know if you're ever a student, but you didn't probably cook too many pot roasts on Sundays and have a person sit down dinner. So a dining room's a little redundant in a house like that. So you're able to create density by adding bedrooms. And so that's a great thing. So if you're renting by the room and you're creating extra bedrooms, there's usually a ton of cash flow in a student rental. And then the last little piece that makes them pretty interesting, I think, especially for new investors or people entering the market, is that they take less capital because the renovations are less invasive or intensive. Usually you're not having to waterproof a basement, or you're not having to do a full conversion through the city. You're often just creating a wall or two, or you're finishing a basement like you would in your own home. It's not a full suite with a separate kitchen and extra bathrooms and things like that. So there's less capital needed for the renovation piece, which allows more people to have that first rung of the ladder start for them.
Yeah, and I love that's a comparison that you're seeing from the duplex or these conversions that you were doing before. From that standpoint, you don't need to convert, right? You're just adding.
Yeah.
Yeah.
And that's an important point, though, because a lot of the homes that I buy for myself that I still have as student rentals, or that I help my clients buy as their realtor for student rentals, I do like them to have the potential to be duplexes. Like I want them to have I want them to meet the parking bylaw. I want them to have the ceiling height in the basement. I want them to have those things, because in the future, when that property is appreciated over 2, 3, 4, 5 years, and you can then refinance it, you can use the building to pay for its own conversion in the future and raise the value again.
There you go. There you go.
Yeah.
So it's not just about exit strategies, it's about actually investment strategies within each property too. And totally. Down the line, when it comes time to resell, if the plan was to renovate and sell it, you're not necessarily going to want a bedroom in the living room. So you switch that back to a living room, but now you've got the duplex, which is obviously heavily sought after in these communities. So great. Very good. So right now, are you still in the student housing space, or have you pivoted? And I know there's a couple big investment moves you've just recently made. So we're going to get into those. Tell me what you're doing right now.
Yeah, so I do still have student rentals. I own them personally. I also own a few as joint ventures with partners. I also do a lot of business. My realtor business is kind of 50-50 between my Toronto kind of social network. My sphere of influence is in Toronto. So I do a lot of just realtor transactions through that in Toronto, but a lot of my investor clients I work with in Peterborough, and a lot of them are going into the student rental for now, duplex conversion later strategy that I just described. So I am in that student rental space still, but I am more focused in the last 12 months on small multifamily apartment buildings. So that, 9 to 16 unit building. I have a sense that we're in a bit of a golden age right now with boomer turnover, let's call it, whether that's in businesses or in property ownership. I think a lot of the last year scared the pants off of that generation, rightfully. We're in a pandemic. Just to put a little time post on this, it's September 7th. But we're still in this like unknown phase. And I think there's a lot of landlords looking to get out of the business. So I'm right there knocking on their door every day to find those leads and to buy those buildings from them.
Is that that's obviously one of the reasons. What are some of the other reasons that you thought multifamily?
Yeah, so it's the same strategy that I used in call it single family or conversions, this value add or BRRRR strategy.
Yeah.
You're just employing it on more doors under one roof. So it's the same thing, going in, increasing the value of the building, either through lowering the expenses or up in the rents through renovations and bringing them up to market rent. And then you're refinancing out the money.
What markets are you doing that in, the multifamily?
Oshawa at the moment, but I'm looking all over Ontario. Please feel free to bring me all of your leads and contacts for any small multifamilies. But yeah, primarily Oshawa right now, but I've got my eyes on other markets as well. And we've got some, let's call it very hot leads and deals in the pipeline. So
sweet. So I guess it's a good point to ask. So where can people find you, whether they want to invest or if they've got a property for you at Ontario Assets? What would be the page or the platform to find you?
Yeah, so I'm at Ontario Assets on a lot of the major platforms that 40-year-olds are on. And I also have my website, ontarioassets.com, which you can kind of set up a free strategy call with me, either as a realtor or as an investment partner. Or email us at info@ontarioassets.com.
Cool. Okay, let's get into a couple big moves that you've made. I'm excited to talk about your Parkdale place. So tell me a little bit about the recent maneuver that you've done, and I guess the result. What did you do there?
Yeah, so that's a bit of a quirky one. This isn't like the type of deal that I normally do or that I recommend to somebody to try to do on their first go round, but it is interesting and it's worth, I guess, mentioning. So I found this place privately in Parkdale. It's a big, like 3,000 square foot, 120-year-old house. It's a beautiful house in a pretty up and coming still neighborhood, but a great neighborhood. And so I met the old guy that owned it, and he had left the place in complete disrepair for 40 years. He'd owned it since 1983, and I don't think he'd cleaned since 1983. And it was just, it was in really rough shape, and he was at a point in his life that he wanted to just be rid of it. So I ended up buying that from him for $1 million even. He had the number in his head. The first day I talked to him, it was $1 million. And 4 weeks later, after 10, 15 meetings, it was still $1 million. So I bought it for $1 million, but I knew it was worth more than that. And I ended up duplexing that house. I put in 2 3-bedroom units, plus there's still a basement that I will eventually get to as well. But what I did that was a little more interesting was I moved into one of those units. Part of my partnership on that property purchase was that I would be living at one of the units. For the trade-off being this net worth gain, because after I duplex that building and, it's a beautiful renovation. I didn't do it to my normal, let's call it 7 out of 10 rental standard. We brought it up to, I knew I was going to live here. I know the people that were going to rent the other 3-bedroom apartment. We wanted to make this a nice downtown house.
Yeah.
But so after that renovation, it was about a $400,000 renovation. We had it appraised in the spring for 2.4 million. So by doing this kind of weird, not cash flowing, quirkier private investment project, we created $1 million in net worth.
Do you figure so you said not cash flowing, but let's say you were to rent the 3-bedroom that you're in right now, would that cash flow, or you need that basement to get the cash flow even?
I'd have to do the exact math on it, but it would be close. Like,
so it's really very much an equity play. It sounds
big time. It's a net worth. I call it a net worth play, but equity play is the same thing. It's just creating a big chunk of future money in my piggy bank.
So what made you look at that? Was that just circumstances? And even though it was outside of the norm, it just was too sweet to pass up?
Yeah, a bit of both. I like to find weird opportunities and get creative with them. But the big reason why I decided to do that was I had a portfolio of cash flowing properties. I could afford to buy one that wasn't going to cash flow right away if I was going to see this big piggy bank future money. So that's something I would recommend, is unless you have the most stable of jobs or the most, a downturn resistant business that's going to make sure you create the income. I don't like to over lever myself. It's one of the reasons I mentioned earlier to make sure I left cash flow on every property, even at refi. I had built up enough cash flow that could support this building if I couldn't. So that's one of the reasons. So it was like seeing the opportunity and too good to pass up, but also because I'd done all the right things to set myself up to be able to do it.
Yeah, you had playroom. You had some playroom. Yeah. Now the house hack, it's interesting you did the house hack. Was it because you wanted to live there? Maybe you wanted to be in the area, or was the house hack a strategic play? I'm curious what benefits you got of doing a house hack later in life. I mean, if you're putting 20%, which you're over $1 million, so you're putting 20. I'm curious, what did that benefit you other than the living, or was it just that?
Yeah. So we have family that lives very close to here, and it's important to myself and my wife to be around our family and our friends. So not only were we going to see this really great kind of net worth gain or equity gain, but it was going to allow us 5 or 10 years, depending on how we take the joint venture on it, to be close to family and for very little living expenses. Like One of the things about a house hack is you've got other people helping pay for your house. So not only do we get to live where we want in a great neighborhood, very close to family, we live for really inexpensively, which allows us to reinvest in other properties as well.
Yeah. I think we skipped it over, but I think I love when I see investors, because we did this too. I went through a phase where we had young kids, and it's like, this is a time that we get to feast on what we did. And I love seeing that, because I think you're getting a taste for all the work that you put in over the years. But I guess the question for you is why are you doing all this? I mean, I think we just got a sliver of it, but why, like when you look back and you think all this energy you've put in, I mean, you quit your job and there's got to be a reason for it. What are some of the things that stick out to you?
Yeah. Time and money freedom. I was obviously early on focused on building my wealth and creating more income for my family and a kind of, let's call it, a more secure future for my retirement or for my inheritance to my son. But it quickly became pretty obvious that my true passion for this was the freedom it gave me with my time. I spent, and anyone that listens to any of my stuff knows I spent the winter pretty much in Florida to not be stuck in my house all winter. So I was able to do that and do business from down there because of how I had structured my companies and my wealth. I was able to go where I wanted to go and do what I wanted to do and not have to be under anyone's thumb.
Yeah, I love that. I love that. I guess a final question was for someone who's early on where you were, I guess what it would be 10 years ago, more than 15, maybe. I don't know. You said 2016. What is that? That puts us 5 years ago.
5 years ago. Yeah.
So for someone who's just kind of starting out, and obviously the market's different, but all the things equal, real estate it's consistently different. I mean, there's some predictability in that. What would be some thoughts that you'd have for someone just getting started? If you can kind of share some words of wisdom to yourself early on, what would those be?
Yeah, I think the big kind of theme, I guess, would be two things. One is getting out of your comfort zone. So a lot of people feel like the world owes them something, in my opinion, and I don't think it owes us anything. So something as uncomfortable as renting out rooms in my first house and then putting a basement apartment in that house. Sure, I wouldn't have chosen to do that if I had every other option in the world, but I was uncomfortable for that time that allowed me to then be very comfortable now. And I think a lot of people skip that uncomfortable phase in life. They avoid that. And I think the more people that start to get on that page, like say co-ownership of a home or buying in a city that you can afford rather than, scrimping and saving and trying to get that condo that's going to be built in 3 years in the neighborhood you like. I think that there's a lot of benefit to being uncomfortable, and that goes for how you use your time also, whether that's, yeah, we all work hard all day long, but you can choose to relax and just stare at the TV when you get home, or you can watch a YouTube video of how to do a joint venture or how to raise capital or something productive that feels like work at first, but eventually you develop a passion for it. And it certainly is going to pay off a lot more than, season 3 of Ozark.
That's really
Shout
good.
out to
Good
shout out to
advice.
Ozark though. I like that show. It's great. But so that's one thing. And then the other thing is just mentorship, seeking out people that have done what you want to do and not being embarrassed to, send them a hello or congratulate them if you see they've done a deal, and start to build that relationship, because those relationships become invaluable. Like I mentioned Quentin earlier, and I have a bunch of his books. I've read all of his books. I've been to every event that he's held since I met him. And I obviously paid him money for coaching for a long time, but he's now a friend and I can call him, and he's seen every problem that any real estate investor is going to have. Quentin's already had it. And he's a friend that I can call immediately. And that was not my aims when I set out to read the books or to meet the people at his group, but it's a benefit of it. And even in that, it was uncomfortable to go to those first few meetings and to be the new guy in the room and not know anything and ask stupid questions and feel intimidated. But, it's changed my life, and it can change anyone's life just getting out there.
It's funny because I love getting messages from folks that are brave enough. I mean, they go outside their comfort zone. They send a message, say, hey, I'm curious about this, or what are your thoughts on this? One, that they feel, welcome enough to come and talk. Good for you. But what strikes me is that even though they might feel like, oh, I'm sorry to ask this, or it feels a little weird to ask this, the questions are all the same. I mean, it's not like I haven't gone through or thought those exact same things down
Yeah.
the road. So I hope that encourages people to just say, you know what, if I'm looking at student rentals, right, or I want to invest in some of these multifamilies, reach out to Randall. I have questions for him. I mean, I know just from what I know of you, we're the type of guys where we have no problem with having those conversations. And it's cliche, but there's no such thing as a dumb question, especially when you're learning. I think what's
Yeah.
dumb is not asking them. And
Yeah.
but
Or
this
getting
has been a
stuck.
really good chat. I really hope people reach out to you and follow guys. Follow Ontario Assets on Instagram. But maybe once again, tell us where can people locate you and keep track of all the cool stuff you're doing.
Yeah, I think Instagram's a good place. So at Ontario Assets is that's me. I run that account. I'm on there posting silly memes sometimes, or my content as well, of course. We have a YouTube channel where I do chats like this with some of my inspirations and friends. I think that's called Insider Wealth. But if you look up Ontario Assets on YouTube, you'll find it there. Or go to ontarioassets.com. I like to write, so there's a lot of articles on there, as well as articles shared by friends of mine.
I think sometimes the best interviews with guests are the ones where we get a story. And I loved hearing your story. Guys, if you did too, please share this, share it on Instagram. You can tag Ontario Assets, tag us at Watson Estates. But I really appreciate you taking the time to come out and share some of the words of wisdom you have today, Randall.
Yeah, thanks for having me. And really, to anyone out there listening, feel free to reach out, book a strategy call. It's free on my website. Or yeah, just good luck to you and your investing journeys. And same to you, Brad.